If you're new to the world of real estate, or you're just not familiar with what's going on in real estate today, you might be a little bit confused about interest rates and how they affect the housing market. So in this video, I'm going to give you 3 major ways in which interest rates have impacted our housing market. Number 1 is interest rates affect your mortgage payment. If you hear news about the Federal Reserve adjusting the interest rates, that's not the same as the mortgage rates, but the mortgage rates do follow that. So anytime there is a adjustment to the rate at which the federal government loans money to banks, it does in fact impact the mortgage rates. And the higher the mortgage rate, of course, the higher the payment on your home, which means that people can afford less of a home when the rate is higher. Number 2 is interest rates affect home prices. When interest rates are low, we see home prices increase very rapidly because money is so cheap to borrow. So a lot of people that otherwise wouldn't be buying a house suddenly get into the mindset of wanting to buy a house, which increases the demand for housing, which then in turn increases the price of these houses. So when we have interest rates that rise, we do see a softening in demand and then a softening in home prices. So that is good news in a way for home buyers. Since interest rates affect affordability, demand, and home prices, then of course it affects the market activity as well. So in a market where interest rates are high, we will see homes stay on the market a little bit longer. So if you're a seller of a property in this market, it's appropriate to anticipate a longer marketing time. And if you're a buyer, same thing. You're going to be looking at houses today that maybe are on the market for several weeks, compared to just a year or two ago when it was rare to see a house on the market more than 10 days. While it may sound like it doesn't make sense to move in a high interest rate market, believe it or not, the market is still very active and people move for all different reasons. It's smart to speak with a very good real estate agent who can help educate you on the different loan options out there. And also consider this: when interest rates do go down, which it's only a matter of time before that happens, then the market is possibly going to get flooded with a bunch of buyers who are just going to be your competition, which most likely will increase the prices. So for a savvy buyer, right now is an excellent time to purchase a home and lock in an interest rate with the idea of possibly refinancing in the future.